Hey guys, so I'm about to head off to work and figured I'd give you some analysis. So essentially what has happened is we are in a reversal now. And the reason for that is, well, the key level, right? So there is second. Just need to hide a couple little things. Okay, cool. Right. So here in this picture, this has been my target for the past 2 years, right? Pretty much. Yeah. This move I call prior to the quadrennial cycle sequential SMT happening, prior to even know who day was and everything like that, right? Um, yeah. And we have hit it pinpoint, right? That is what this key level is. Yeah. I can come all the way back to the daily, all the way back down into here and show you the exact low that I call the draw on liquidity. Right? Now, we had a swell, we had a failure swing up here, which caused this move down here. Okay. Now, everyone will be targeting these highs for the reversal, and this is where we're going to go. Okay. I do not believe that because I believe that we are going to come down here and take this because we are going to come down here and take something much, 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 much bigger. Okay. So, having this belief for the past 2 years has been pretty fucking hard to hold. But it leads to stuff like this. Okay. We hit the key level after a massive rundown. Yeah. And as you can see here, this is the devil's mark that I was talking about last week on Friday. Right. I said I wanted it to get hit here at 9 o'clock because I thought the news was at the 8:30, guys. I legitimately did not know the news was at 10. And I'm just like, yeah, what the fuck? Why is price of action so lethargic, man? This news is shit. And then we get on stream and it's just like, wait, the fucking news is about to come. And then it hits the devil's mark. Right? So just like the call that I made on yes. Um what was it, like a 4 hour or something like that? Yeah, the 4 hours double mark. Right? So I called price from basically like we didn't get the upward movement I wanted into the fair value gap here. Right? But nonetheless, like we went to where I said, and that's where we're going to reverse from. Right? Pay attention to the devil's marks, guys. They do matter. You want to learn more about him? Trader Dexter. Yeah. What just happened? All right. Cool. So if you get down to the nitty gritty of it all, the key level was correct and has been correct for the past 2 years. It just took a long time to get there, and we needed that quadrennial cycle sequential SMT. Now you'll notice that this happened at the start of the year. Right? If you go out to the 3 monthly, actually, I'll do it on my other chart. If you go out to the, and I know that on this chart, we didn't take sell side liquidity. I understand that, right? This is a chart that I do not use to chart for specific reasons like this. Okay, so know that you can't see it there. This is a different broker. This is Oander. I use FXCM for my charting. So yeah, what this video is about is the fractality of price. Okay, overall, that's what this is about. But the question was about my trade and the confluences for it, right? So the biggest one is the fact that we have created quadrennial cycle sequential SMT, right? And then we created quadrennial cycle sequential SMT at the very end of it. And now everyone and their dog is all of a sudden bullish for euro, when in my opinion it's the worst time to be bullish for euro. That doesn't mean long term. That doesn't mean short term there is no reason to be bullish. We hit a monthly fair value gap, guys. What do you think we're going to do now? Right? We swept external range liquidity with a sequential SMT quadrennial cycle value swing on euro. So we swept the liquidity after magnetoing the high that created this. Right? Because this is the magneto, right? And then we came up and took it out, which then created this, which then gave us this move. The move that I was expecting here, but they caught the reversal from here to here. Okay? So all of this matters for this trade, right? Because I've known about it for 2.5 years. Or what was it? 2 years, whatever it is. Right? I called it here in September of 23. So it's been a year and a bit. So a year and 3 or 4 months. Right? So when it got hit, and I saw on the 9 hour, this big CRT candle. Right? I'm just like, okay, that is the soup of the CRT candle low. We attacked the 50 and I TP'd some. And when we take the high, I'll TP a little bit more. But when we come down, if we make a fair value gap here, which is possible, depending on the lower time frame structure, like, is this candle going to come down and then go up, right, inside of New York? And if that's the case, then the next 4-hour candle doesn't finish until 9 o'clock. So we have all the way up until the 8:30, right, for this to be achieved. So then, on the lower time frame, you want like a low to get swept or something like that. Internal range liquidity in here. And then in the future, this low being built inside of this 4-hour fair value gap that might be created. Right? Or the fair value gap smaller, right? And we just stagnate here till 9 o'clock. And then after 9 o'clock, we'll make a move up, which will create the fair value gap. Right? And then we hit it later on and use it as the low time frame liquidity for the high time frame gap. Right? And so you were simply just thinking in multiple time frames at once. So my trade comes from the same thing, right? On the other asset, you'll see a devil's mark, right? CRT candle, swept the low, attacked the high, traded up above, comes back down, and off we go. And it just repeats over and over and over again. All right. CRT candle, swept the low, attacked the high. All right. see how every exit is an entry and every entry is an exit. My exit, all right, you can't see it. It's a fair value gap there. Anyway, all right, it inverts the fair value gap. Up you go, right? Or it could have just centers down, and this could have been the high of everything. That's why you take profits, right? And so this little time frame structure here from this key level means bullish movement, and if we can get above here, then there's a potential that we can actually get above here, right? So TP, potential to reverse, okay. TP2, okay, potential to reverse from here, okay. So now I've taken all my money. I don't care if it goes there, but if it does, I can trade from that. This could just be a kiss of death, or it could be a full-blown reversal. But I am looking at a 9-hour, right, CRT candle, a sweep of the low, and we are going to go up and do what? Attack the high. And if we get above here, then there's a possibility that we do it there, which would be like a weekly candle. And now if we get up above it, maybe we can get up to here, which is a monthly candle. And all I'm doing is playing a monthly fair value gap into a monthly fair value gap. Right? But I'm doing it from thinking about it here and how I want structure to be built on the way up. Fair value gap. Why would I want a TP around this place? Right? We're starting to come back up inside of this consolidation. If we get above here, right, these equal highs, the original consolidation, first leg of distribution, smart money reversal, first leg of accumulation, second leg of accumulation, silver bullet into sell side, buy side liquidity. Where are we going? We are retracing back down into what? This inverted fair value gap. All right. Can price find support here while dipping into this fair value gap? Possibly. And will it go up over the next couple of hours before we go into 9 o'clock? Possibly. Which will give you a 4-hour candle that is going to go up from here, which will create the fucking fair value gap if it doesn't go all the way down here and efficiently deliver price. But then look over here. You now have this inverted fair value gap on the H4. Maybe that's what is used to create fair value gaps. And this is just how you read price and how you think about it in a fractal nature, so you know where price is going to go. And you are just forever changing the time frames while the lines stay on your chart and you know where you are. All right. That is the best way to find fractality, is to have your candles on the chart, even though it's messy, it's ugly. You see that the sell side liquidity was just this weekly candle's low. So it's previous week low. Right? And the buy side liquidity, is just previous week high. And so if we get up above this high, and maybe we trade even above this buy side liquidity, which is the previous week high, then maybe we can get to the monthly fair value gap, because that makes sense. If you have a macro idea, right? My macro idea was basically this: boom, boom, boom. Now that didn't work, but that didn't mean, right, that it didn't play out before going to my invalidation. which was this high. All right. We just don't get there as fast as I wanted. Okay. But now that we're here, where are we going? All right. Now, why are we doing that? Well, you can't really see it on this chart, but there's a consolidation down here. It's the original consolidation. Smart money reversal. First leg of distribution. Oops. Second leg of distribution into sell side liquidity. Right? And this is the original consolidation. And it's the same thing on Dixie. So with that all in mind, it's pretty easy to know where price is going to create a quadrennial cycle sequential SMT. If you can zoom out and look at what is happening correctly and hold on to your macro views, if you're actually decent at them. I was wrong for a long time about my timing, and Day has helped me with timing. Right. External range liquidity into internal range liquidity into external range liquidity that is actually internal range liquidity that will then be used to be sending price down to external range liquidity, aka a continuation from the Judas swing that got created after we broke out of this range. Right. Yes, we are going to go up for the next couple of months. No, it doesn't change my macro views at all. This quadrennial sequential SMT that you see right here is going to get blown the fuck out. I do not trust sequential SMTs forever. Okay, guys. They fail all the time in face of expansion candles. That is when you need to start learning how to do other things. Okay? It's not the be all end all. Because there is such thing as sequential SMT market structure shift, which tells you it's not the be all end all. So if we get up here and we create a fair value gap on this day, that would mean that we need Monday to be an expansion candle. It seems like Monday is setting up to be an expansion candle. So why be bearish? There's no reason to be bearish because the daily looks like it wants to be bullish because we hit the key level inside of a monthly fair value gap below the consequent encroachment. And we have rejected already and we are forcefully displacing. Let's see if we get it today. And if we do, then Tuesday, Wednesday retracement into Monday fair value gap, Thursday, Friday continuation, and Friday above this high. All right. And if we do Friday above this high, then we have a Monday low, Friday high of the week, which would be an expansion candle on the weekly, which means there's a possibility that we take this. And if we take this, it ain't much to go there. All of this simply because this candle created a fair value gap. We knew about this move in December when it closed. When I said that we need to close the year below this low. All right? It has to close the year below this low. And it did it. Which means the wick of the next year's candle is going to be created where, guys? Where? You already know this. You know it has to happen. Open, high, low, close. guaranteed. Time is consistent. It never changes. And when it does change, well, that's just the joker. And when you work out what the joker is, well, time just unlocks in different ways. Because for every action, there is a reaction in this market. And it is forever just action, reaction, action, reaction, action, reaction. Like a snake chasing its tail. So, start using your time frames correctly. Start allowing for ugliness to be on your chart because it shows you something. And start labeling things correctly. This isn't buy side liquidity, right? It's the monthly fair value gap. It's internal range liquidity. It's the previous month high. So what does that mean? It means that you have the potential of a monthly cycle sequential SMT. All right. And a quarterly cycle sequential SMT. They both sit there. Right. And it's going to be hitting a high time frame PD array. It's going to sweep a high time frame liquidity pool. And most likely is going to have sequential SMT at the high. And you know all of that from all of this. Yeah. Because it just repeats over and over and over again. Non-stop. Every exit is an entry. Every entry is an exit. The short to the fair value gap FD. Done. Right. The long to the rejection wick 50. Down. Right. Into the inverted fair value gap. Up. Taking out low resistance liquidity run. Equal highs. Right. Before taking out buy side liquidity. Because it wants that monthly fair value gap. And it will aggressively move to it. And then it might consolidate inside of here. Before sweeping into it. If it's to be an institutional order flow entry deal. Then sometime around here. Shit's just going to reverse. Or maybe we go higher. Above these highs. Right. Maybe we hit something in here. Maybe we turtle soup this. You know. And we just die from there. That's about halfway up. But before we can do that, before we can have anything more in our plans, it just has to get above here. And then once it gets above here, cool. Check mark 1. Get above here. Cool. Check mark 2. Get above here. Cool. Check mark 3. And if it fails to get to there and reverses like that, so be it. Start trading the down move. Right. Trade what you see. Right. Not what you want to see. But you can have a plan of what you want to see. Because that's what forecasting is, guys. Just having a plan, looking at structure, having a guess at like what should happen. And if that thing does happen, you take the trade. Right? Got a whole lot more time for this candle to print. A whole lot more for Tuesday to print. What does Wednesday and Thursday bring? And what does Friday bring? Right? Or does it say, fuck you all and come all the way up here today? Who knows? Let's wait and see what it shows us to do. So, that is why fractality is so important, because once you can do this, what the hell did I get in? No one, yeah. All right, fair value gap, swing low. All right. You can go, right, from having a basic 7-hour trade. I actually drew this rectangle completely by accident, right? It was literally based off where the high was or some shit at the time I was doing it. To see that happen, pinpoint's insane, man. But that just goes to show that you can draw a line on any part of the chart, and there'll be a candle that does that. And you'll be like, wow, man, how did that happen? Probabilities, guys. It's fucking probabilities. Okay. So, 6-hour trade. I've already taken most of my money out. Like, I'm holding like maybe 15% of this trade still. And I'll take like 1% there. Cool, I just made an extra 10%. Extra 0.1 R. Right. I'll take another 1% there. Cool, that's an extra 20% basically. And then I'll take my final 10% or whatever there. Cool, I just made an extra 2.5 R. Right? And I can do that with every single trade that I want to take up, because you're holding this high time frame target in mind while looking at low time frame structure, right? Taking your profits with proper risk management, right? Staying profitable, but not being afraid of when price comes back down on you. Yeah? Because you know where price seems to want to go to, because you have a high time frame analysis. You're not going into the market blind. Yeah? You're thinking in a fractal nature. And all you have to do, guys, to unlock it is to cycle through the time frames and just look at what happens to your lines. And you will see magnificent things. Okay? So, I hope everyone at least found something in that useful. And yeah. I think for Euro over the next 2 to 3 weeks, we're going to be up here. And then it's going to be really, really, really fucking good times over the next year, if you understand what is potentially coming is apocalyptic. No, not apocalyptic, but it should have a lot of volatility in it, guys. And that volatility is where we are going to make so much money. Because, my God, it was painful chopping through this shit. Right? This, oh, it's going to be so, so sweet. Now, as I say all that, this, holy, okay, so the reason like I drew the fair value gap like this much, right, was because that's where the candle was at the time. And then it's come down, literally. Oh, man. I am going to look like such a furu. Like if that... if that actually plays out, guys, GG, well played. It would just be hilarious, coincidental stuff, right? Anyway, I hope that helped. If there's anything that you want me to cover, any questions, just hit me up in the FX chat or something like that, and we'll get to it. And good trading this week, guys.